Hey everybody, welcome to Trading Capital. It is April 29th here on this lovely Friday evening. Analyzing the US dollar in this video and why we are shorting the US dollar. The US dollar has had a substantial run. You can see by this impulse move here, many multiple green days in a row, followed by one day of consolidation, another move up, another one day of consolidation, and you finally had another 6 green candle count to the upside. And the beautiful thing is that the resistance that you've run into now is this double top here in March and this double top here all the way back in 2016. So you've completely negated, and basically, let me draw a trend line from this double top on the DXY. So if we take that high to that high, you can see here we've pierced through it and pulled back off of that double top resistance. So not only were you on a time count, you're overbought, you're extended, and you're into multi-year resistance double top zones. So that's why we pulled the short on the UUP. We're slightly out of the money, but nonetheless, I do think the UUP is extended, and we are shorting this, so we expect the US dollar to fall. The fact that, just let me break this down for a second. Okay, so let's go to the weekly time frame on the US dollar. So the US dollar here, you can see the last price action basically since the start of May 2021, all the way rising up. It's had a tremendous move into this double top resistance. Now, it is trading in this long-term range, this multi-year parallel channel range, so there is a chance that it could go all the way up to this top of this channel, which we're okay to have it go up there. We've just started accumulating a small position, and we'll happily add. But the fact that when we look at this chart, the fact that we are trading near the 2016 highs, okay, and this is the US dollar. This is showing the power of the US dollar, okay? And of course, we have to consider what the US dollar is measured against. The US dollar is measured against all of the other weak fiat currencies. So, but when you think about it logically, and the fact that the US dollar is now trading at the double top zones of 2016, 2017, as well as here 2020, and then you look at the Federal Reserve's balance sheet, we're approaching 9 trillion. So the fact that we've more than doubled our balance sheet since those levels, here's 2016, 2017, around the 4 trillion. We've more than doubled our balance sheet since those 2016 and 2020 levels. So how can the US dollar be that as strong as those periods when we've doubled the Federal Reserve's balance sheet and increased our monetary M1 and M2 supply by drastic amounts over the last 3 years? When you think about that and the fact that the US dollar is back to these highs, even though it's been diluted and inflated way more compared to those previous years, it's a no-brainer short. We know this cycle is going to come to an end with the US dollar crashing. There's no way that this US dollar has a true representation and should be at these highs as to when there was about 4.5 trillion less of the US dollars circulating in our financial system. So obviously, again, that's why I started this video, to really reinforce that the US dollar is measured against all the other fiat currencies. So all the other fiat currencies have been devaluing just as fast, well, in this case, faster. And it really shows that at the moment the US dollar is still the cleanest of the dirty shirts in the laundry basket. So does it mean it's good? I certainly don't think so. I don't believe in the US dollar long term. I just use it as a currency vehicle because it is the world reserve's currency for the time being. I certainly just think that changes over the next 1 to 2 decades. But nonetheless, shorting the US dollar on a time count into double top resistance was a no-brainer for me. And the thing about a stronger dollar, if you align the run in the US dollar that it's had over the last 6 months, typically a stronger currency really has tremendous amounts of pressure on the overall stock market. So essentially, a stronger US dollar has been putting tremendous pressure on our stock market. Typically, when you see a dollar rallying. It means people are fleeing more to safety. They don't really want to hold their assets in speculative investment. The US dollar is a sign of safety, a store of safety for many investors and people around the world, and they often flock to it in times of crisis or potentially some sort of liquidity crunch or some sort of stock market collapse. So we have to recognize that a stronger dollar has put a tremendous amount of pressure as per the sell-off in the markets over the last few months. But now the fact that I do believe we are going to see a potentially weakening dollar, that does align with the fact that I think the markets could catch a little bit of a bounce here over the short term. I don't think the bounce is going to last. It's certainly going to be one that you want to sell your longs so that you raise cash to potentially start looking for next shorting opportunities on the markets. I don't think the markets are at their lows yet. I do think they're putting in some sort of an interim low or potentially a tad bit lower before they have a decent bounce again. But sell into strength, buy into weakness. We've been accumulating long positions into the weakness, into oversold names that make absolute sense, names that people have totally panicked out of and have no reason to have been shredded that much. Amazon for sure, we're accumulating that. Should have dropped 15% in one day. Probably not right off the hop, but that being said, I do think it goes lower over time, but it is certainly a beautiful buying opportunity now that it's testing 22-month lows on a closing basis. So again, US dollar, strong US dollar puts pressure on the markets. A weak US dollar actually supports the markets. So look for a pullback, and that could coincide with potentially a short-term bounce in the New York Stock Exchange, NASDAQ, S&P 500, and etc. Let's just look at the UUP, where I'm potentially looking to take profits once the UUP. This one may be a little bit longer that we hold the UUP, but nonetheless, you could potentially look to take profits down over here. Here will be a good level of support. That would mean that we make, it's not, again, this is a very slow moving asset, so it's not looking like you're going to make a killer amount of percent. It's just a nice, not as volatile asset class to park some money in, specifically cash. Basically, it's a cash 1-to-1 ratio, and we are shorting the US dollar. So, since we are holding large amounts of cash in our position already, I'm fine with going in an asset class that isn't really that volatile like the US dollar and potentially make some money while I'm virtually sitting in cash. Instead of just having cash sitting in cash, I could potentially have it sitting in a UUP short, which is basically cash, and have a high probability of making a little bit of percentage gains on that cash while it just sits there ready to find bigger and better opportunities in the market. So again, shorting US dollar via the UUP, I think that's going to be a great trade for us. It's extended. Could it go a little bit higher? It certainly could. If it does start to break higher, we'll look to short it up here at the top of this channel. That'll be a great level to double down on the short and really watch it start to come in substantially.